Welcome back, everyone, to another Beyond Moon, a crypto wealth series. Today's conversation is with longtime financial advisor slash wealth manager, Marcelo Cardinal. He's based out of Florida. However, that shouldn't stop any of you from paying attention to what Marcelo has to say. We're going to talk about tax advantage. We're going to talk about estate planning, different sorts and different kinds of trusts and who it may benefit and who it may not. This is an incredible conversation and one to take notes because if you're like me, you're anticipating quite a substantial windfall from your digital asset investments. And as we always try to do with these Beyond Moon series, bring you incredible insight into how to best manage and prepare to deal with the wealth that's coming from your investments. So grab your notepad, maybe a cup of coffee, and enjoy this conversation because it's coming right now. So Marcelo, thank you so much for taking the time to chat with me today. How are things over there in South Florida?
Very good. It's a pleasure to sit with you and discuss some of these topics. I am, honored that you had reached out to me, and hopefully I can be of insight to you.
Well, I'll tell you, one of the wonderful things about doing this show is that as my education and knowledge base grows, I get more inquisitive, right? And so when I first started down this path of trying to become a better investor and understand how to capitalize my investments as it pertains to dealing with the profits, when I stumbled across estate planning as a topic, as an industry, and started thinking about, okay, I'm going to have X, right? And I'm planning to be very wealthy from my investments. And I've never been wealthy before. So I've never done any of these things prior. So I know I'm going to need to reach out to a professional, right? Well, it's amazing that in the industry that you operate in, very few practitioners are knowledgeable about digital assets, how they're taxed, how they're dealt with, how do you structure something. And so when I came across you, I thought, I've got to have you on the show, and you were so gracious to come on. So before we get into the nuts and bolts of this stuff, let's just take a couple minutes and let the audience know a little bit about you, your experience in the industry, where you come from, and kind of what your plan is, and then we'll go into specifics.
Okay, sounds good. I've been a financial advisor almost 20 years, just a couple months away from being 20 years. I've been working specifically in the area of estate planning and asset protection, inheritance planning for most of my career. I have relationships with many of the top accounting firms and legal firms in my area. Mostly I try to help small business owners with protecting their assets and distributing their assets to their heirs, succession planning, and buy-sell agreements amongst partnerships and stuff like that. And which kind of leads me back to the topic at hand in a sense. What happened was in 2015. I started to educate myself on Bitcoin. It actually, came into my radar. And what struck me the most about it was the fact of that you couldn't change the ledger, and that it had a consensus and it was distributed. And then the how it worked, how there was every 4 years that the quantity would have, and so that is a deflationary currency. And uh, in my business, I've also had strong familiarities with gold and the commodity sector. and I always kind of had an affinity with gold. And I've seen how gold has participated in economies in the past. So that I actually traveled, I don't know, to about over 50 different countries. So I have an idea, um, and you can see how empires get built and have come down, through your travels. And so when I started to relate those same properties that gold has, and I noticed that Bitcoin conceptually could actually be better, in storing that value. Just in the features of how it could be divisible and how you can send it instantaneously to somebody else, throughout the planet. Those things really struck me. So I was drawn to it. I participated in 2015, and I saw the whole cycle. I saw the cycle of how it went up tremendously in 2017. I went through that whole process. It was not a process that I was unfamiliar to, considering the fact that I have had exposure to the gold and commodities in the past and in my business. But it was a lot more brutal. The ups and downs were a lot more significant. So anybody that's been through those ups and downs in commodities or in Bitcoin, they know, they really know what volatility is, and it could be quite painful. So what I through my process of understanding the asset a bit more, and then trying to see how I can incorporate myself through my knowledge base and my business, I started to think about, if this is classified as property, why can't I just use the same tools that I've been using to protect property in my career? Why can't I use, the concept of an LLC and have it, be an asset protector for this asset? Why would we want to do that? Well, as we were talking before we pressed record, you had brought up the example of a car accident and someone coming after you. But in your example, what if in that car accident someone had died? Because that's where the tremendous liability is going to come from. The lawsuit conceptually will be higher than your liability limits on your auto policy. It could run, it could be a couple $1,000,000. So then why not have, if you can create a legal structure for yourself where if someone comes after you, you're putting some barriers of entry into your personal assets. So that's why, having that LLC, and you can conceptually add other layers to it, and that business structure, depending if you're married or not, how you title that LLC, and how you distribute the shares of the LLC, where you can add maybe another layer and have a trust, an irrevocable trust, or revocable trust, where you can distribute some of those assets. And maybe because we know this asset is very volatile, that it could increase in value tremendously, that maybe you can start distributing some of those assets into your irrevocable trust, and then now it becomes a generational tool for your heirs and your children. Once you put these assets into a trust, then, as there are generational, you're providing that protection for your children. But let's say when they get married later on, the asset is sheltered. So they continuously have this asset that they're carrying on, and they're transferring to, the following generations, being this asset that, we believe that is going to be around for and take us into the future. Which leads me to bring up, we don't even know the true or total ramifications of what digital assets, or Bitcoin specifically. I'm specifically talking about Bitcoin. I know you have understanding with other assets, but I have an affinity to Bitcoin because of those properties that we talked about to gold. So I really focus my discussion more on Bitcoin. So what I'm trying to get at is that as we believe in this sector, that it's going to revolutionize the financial sector and all sectors in general. Why not have sorry, and I go back one step, that we don't even know the true fruits of what this asset is going to provide. We have absolutely no idea. It's only been 11 years. You know, we're just getting started. We don't even know where it's going to take us in reality. You know, I like to call it, it's like an intergalactic asset. You know, I mean, we have absolutely no idea what we're dealing with right now. We're in such an infantile state of affairs at this point that we can't comprehend, but that's what makes the asset precious. And being precious, then we need to protect it with the current framework of legal tools. So that way we make sure, because as the old system and the new system combine, we can't think that what's going to happen is just that the old system is just going to completely wither away and die off. No, we have to work with both systems, and then it will morph into something else. So you know, with that said, then yes, you know, working with these corporate structures, I believe, is extremely important, not only from an asset protection vehicle, but conceptually from an estate planning and inheritance vehicle. I'm sorry, I'm rambling on, because the way I envision it is that, you know, and I encourage people to actually do their own research also. And I think there's a great book by, I'm not sure if you're familiar with her, Pamela Morgan.
I personally am not familiar with Pamela Morgan.
Yeah, she has a book specifically on crypto inheritance planning.
Okay.
And basically what she's talking about in the book, she's focusing in on more of creating a document on paper. And she's encouraging you to do it with actually not something that you type online, but, you know, with a pen, where you're writing out, you know, basically, you know, the instructions for your family, where you're writing out let's say if you have a hardware wallet or a digital wallet or whatever it is, that you're putting all the passwords, the username, passwords, that you're pretty much you're stating all this information for your heirs, and that you would keep in a sealed envelope in a safe place, or in a safe, waterproof, fireproof safe. So then when you pass away, not only is your attorney going to have your will and your trust and your other documents, but you're also going to have these instructions with all the keys and key phrases that you're keeping private, you know. And then maybe you can have that in multiple locations, secure locations. But what I'm trying to get at is that at least your heirs are going to know what you have, and they're going to have the instructions of how to conceptually access those precious assets. And then you would have the backing of your legal structure, an LLC, a trust, because a will doesn't really, it really doesn't do much, because with a will you end up in probate, you know, in the court system, and you know that could be expensive. But there are ways to transfer assets without having to go through probate, and that's kind of really what I try to help my clients do. With all their other assets. Now I'm adding the aspect of the digital assets into my planning. So what I'm trying to get at is that if you do have a trust, then that doesn't go through probate. So you don't have to have all those fees. You can, you know, that's going to be a legal mechanism that's going to avoid that, easy transferability to your heirs. You know, but one thing I wanted to point out was that in that book, I recommend that anybody read, you know, for everybody to read that book, so then you can have the guidelines of that letter that you would put with your documents. And then what I think, after you have your letter, your legal structure, then what you can look at is also doing, you know, like a multi-sig, you know, type of operation. I'm not, or protection. I'm not sure if you're familiar with the individuals at keys.casa. Where they provide a multi-sig, where they have an app, phone app, where you have keys on the app, you have a hardware wallet, they keep a certain number of keys, and then there's also the keys that you have with an attorney, and then possibly in a safe. So it's like a 3 of 5 protection for your digital assets. So I'm kind of like setting up the whole framework in our conversation right now, where you have a note that you're writing out with all the instructions, you have your legal documents, and then you have your multi-sig to provide you with the ultimate protection. So you have all that structured, and then you're fully planned out for you know, whatever can happen coming forward. I'm not sure if you have any questions.
Well, I'll tell you, you know, one of the things I think a lot of, because this is an area that most of the blue collar investors don't understand, right? They just don't know. And that's okay. That's the purpose of these videos, is to provide this kind of information. So For instance, for myself, and I'll use me, we'll use me as an example, a case study. So here I am, an individual who's been acquiring digital assets for the last 2.5 years, with the expectation that the return on investment will be substantial.
Okay.
Okay. So we're talking about under $100,000 US invested with expected returns of millions.
Okay.
Okay, great. Now, here's the thing. The individual, if the capital appreciation or the return on investment should reach millions, and then I decide to go do something, i.e. call my buddy Marcelo and say, okay, hey, let's set up that LLC. I've done enough research. I think an irrevocable trust, I want it to go multi-generation is the direction I want to go. And you go, okay, great. However, Jerry, these are concerns, right? You're an individual now with a net worth of multi-million dollars. That's going to be viewed by the powers that be completely different than a guy with $50,000.
Yeah, no.
So it's actually advantageous for me to make the call to you, do the research up front, and go, all right, let's really dive into this. What are the nuts and bolts? What is it going to cost to put together an LLC? What is it going to cost to put this trust I want to put together while my net worth is low? Because once these assets are now tucked away in these legal entities, the appreciation that happens within those entities will not be viewed upon as somebody trying to hide money.
Yeah, no, exactly, 100%.
Well, if I'm coming to you with a net worth of $5 million and I'm looking to sock away 4.25 million of it in these entities, that could raise some eyebrows versus the guy with $50,000. You know what I mean? I think people need to be thinking proactively.
No,
right?
they
I'm not saying that everybody should make the phone call to you, do this regardless of their situation, but there should be some kind of limit. Now, this is one I've made up. Tell me what you're thinking about this. If the crypto investor expects a greater return so that he is now has a net worth of $50,000 or above, it'd be a good idea to look into these things. If you're thinking that your $1,000 is going to turn into $20,000, probably no need to look at, you know what I mean? Use the money to pay off your debt or something like that. You're not going to need to concern yourself with setting up a limited liability corporation. You're not going to need to, with $20,000, you're not going to need to set up a irrevocable trust. But you get up into the hundreds of thousands of dollars, millions of dollars, you're going to want to protect that money and ensure that it is going to carry out your wishes. So if your wish is to have multi-generational wealth, then you set up the trust in that way so that not only your children, but maybe your children's children, their children, etc. Right?
Let me give you an example of something. So
please do.
You can get an idea. You got to remember as well that when you set up these structures, it's not like you can just do whatever you want. So if you set up an irrevocable trust, you're releasing control of the asset to a trustee. So
right.
So when you do that, that entity, it's going to have its own tax ID number. It's going to have its own tax structure. It's separate of you. But what I'm trying to get at is, again, you lose control, but what do you gain? What you gain is that right now, what's a Bitcoin worth right now? Let's say $10,500. You can basically, you can gift $10,500 to the trust, buy, let's say, one Bitcoin, and we don't know what one Bitcoin could be worth later there is no gift tax at that point because you're below the threshold. And but now you have an asset that, let's say, is there for your kids, and they don't have to pay any taxes on it. There's no estate tax. When you pass away, they're going to be able to inherit that, and it's going to go on, for generations. but what about when a Bitcoin is worth more? Then you're going to lose out on that, the ability to do that. Even though there are gift tax thresholds. So what I'm trying to get at, why wouldn't you do the planning now? If you have children and you can shelter, Bitcoin for each of them and these type of structures, and then they don't have to pay any tax on them later. I mean, that is an amazing thing that you can conceptually do for them. You know what I mean? But I think that also the important thing is also the asset protection and then the inheritance planning, because the estate planning is not necessarily for everybody. That's mostly if if you have a huge estate tax liability, and not everybody has that much, can have a net worth that's in the excess of 25 million. You know what I mean? So what I'm trying to get at is, and take baby steps. You don't have to do everything. I would start with just basic stuff, or if you don't do any type of an LLC or any type of trust or anything like that, yeah, I definitely recommend that you do set up some kind of multi-sig protection plan for yourself anyways. Like I said, I do recommend the guys at Keys.Casa. I've been in conversations with them, and definitely they're individuals that know what they're doing, and I would definitely recommend them. I would definitely recommend them to yourself. I would do some research and familiarize yourself with their process, and I would say that to jump on board and do something with them. Because remember, when you do this type of planning, you have to also take into consideration the jurisdiction. I'm not really familiar with the laws over there in Costa Rica, but I am familiar with the laws in my area. So, that's something to take into consideration. Another thing, aside, but it still works in the same arena, is that when you can start using qualified plans, IRAs, and or if you have a 401k, maybe you can do an in-service distribution of the assets, and then put it into a self-directed IRA and purchase some Bitcoin. Because with that mechanism, now you do have an asset, because you have a beneficiary in a qualified plan. Now it's a pass-through. It's going to pass through probate. It's going to avoid probate. It's a probate avoidance scheme. So that's something that I would look into if someone has, let's say they have a 401k, they mostly have traditional assets. Talk to their HR department, see if you can do an in-service distribution. You do an in-service distribution into a Bitcoin IRA, and then you can buy some Bitcoin, and then there you have a tax-deferred asset, going into the future. Or if you can, I think that Gemini does allow you through their institutional, website, where you could actually maybe even set up a Roth IRA, which would be even better. If you qualify for a Roth IRA, now you can put money into the vehicle, and the money grows tax-free, and then it also it passes through. It doesn't go to probate. So using qualified plans is a brilliant idea. I think right now, I would encourage anybody to look into doing that. Maybe as time goes on, I'll probably have someone that I could recommend. I don't have anybody right now. I have talked to some, but I haven't really worked in that area. But maybe, in the future we can have a conversation. I can let you know, look, these guys are doing it. Seems like they're pretty reputable. Or, another thing that can be done is that maybe you can talk to Gemini and see who they're using as a third-party administrator for these qualified plans. Maybe they do have a list. And then, maybe you can interview with them and see who you would want to use. But I think the qualified plans is an exceptional way to be able to shelter the assets, have some protection, and then transferability, to heirs is, it's definitely a good idea. I'm not sure if that's something that you know too much about.
I know a little. I've been in talks with iTrust Capital. Matter of fact, Anthony.
Okay.
From iTrust Capital, I've got an interview set up with him on Monday. I've read through the documents produced by Kingdom Trust, which is another one of these entities. You mentioned Gemini. I have not looked into them, but a lot of them are very similar. I personally have a Roth IRA with Schwab, my investment broker. And I'll be honest, the Schwab Roth IRA is loaded with GBTC, which is Grayscale's
Okay.
Bitcoin
Yeah.
investment trust, which I know enough about that to know I'm paying a monster premium for the exposure to Bitcoin. However, at Schwab, I don't have access to the underlying asset of Bitcoin, but I do have exposure to Bitcoin through the GBTC over-the-counter fund from Grayscale. So,
Yeah.
you know, and it's a long-term, it's a super long-term hold kind of thing. You know, I've got another 3 or 4 years before I have access to my Roth IRA. You know, I can't take any distribution from it or disbursement.
Okay.
You bring up some really great points. And I think the big takeaway for me on this is that there is no one entity or person that I will utilize in my capitalization strategy. And when I say capitalization strategy, I'm talking about how am I going to deal with the massive wealth that I'm going to build, right? How am I going to deal with the wave of profit that my investments are going to generate over the next 5, 6, 7 years? So obviously, an estate planner like yourself, a tax attorney, crucial. And the neat thing about it is that you folks in that industry, you work well together. You all speak the same language.
Yeah.
Many of these folks you've had relationships with for years, and there is, you know, I apologize for the noise. I'm in.
No,
I
don't
don't
worry
know,
about it.
deal with
Don't
all
worry
the
about
trucks today. But
it. Don't worry
anyway,
about it.
the point being,
You do make an excellent point, because in reality, it's not one person or one person in one industry that's going to be able to help you out with this. Yeah, you need people that have tax familiarity. You need to deal with an estate attorney or a financial advisor like myself. What the other thing is, when you're dealing with an estate attorney, it's also like what we were talking about, jurisdiction. And then if you have, if you live overseas, you would want to know, you know, someone that has, you know, international tax expertise in estate planning, you know, because maybe then at that point you would probably have to set up, if you were going to set up an LLC, it'd be an offshore LLC in the islands or something like that. You know, so those are things to take into consideration. Obviously, the expense to do anything of that sort is going to be quite high. But at the same time, you know, you know, depending on what your net worth is, it may make sense to be able to create those structures. You know,
and that's the point, though. The point that that is the point. None of us know exactly. However, to take time now to get a understanding, because nobody should make a phone call to you having only watched this interview. However, having watched this interview, if they go read Pamela Moore's book, right? Maybe a couple instructional videos on YouTube about how what the difference between a revocable trust and a non-revocable trust is. What are some of the fundamental elements of creating an LLC, and understanding the relationship between those things and their specific jurisdiction, wherever the location of where they live. Then they make a call to you, bringing a context of being relatively informed to a professional like yourself to get all the kinks ironed out.
Yeah, and I would definitely add the understanding of how a multi-sig plan would work as well. I mean, that's, you know, that would put everything into perspective at that juncture. You know, and you would have a good level of understanding.
No, I totally get that.
Definitely.
And one of the things that I think is going to be absolutely crucial, like if you were to break down the demographics of wealth planners, estate planners, registered investment advisors, CPAs, tax attorneys, etc. in the United States, and you said, okay, all of them represent 100% of the pool, my guess is only approximately 1% are educated in the digital asset space.
Yeah, it could be 1%, or it could be conceptually less than that. I mean, it's a new industry.
Exactly. Like for instance, my tax guy that I've had for years, and I was a sole proprietor, independent contractor, and for years I was, and he was great. This guy knew all the ins and outs. We took advantage of every tax advantage that I could take advantage of, but I paid my tax according to law. Okay, I have no problem with that. When I got into crypto in 2018, and we were getting close to 2019, and it was time to do my quote unquote 2018 taxes, I'm on the phone with him. Hey, I've liquidated my equity positions and got into digital assets. What? I said, okay, Bitcoin. He said, what? I said, okay, cryptocurrency. He goes, I don't know anything about that. I go, okay, well, I'm going to have X to deal with, and I'm going to need your help. And he said, I'm not going to be able to help you. I am not interested, number one, in that learning curve of understanding that whole new thing. So maybe you should find somebody else. And I'm like, oh no, this is a 20-year relationship, right? However, nowadays, I can just use my TaxBit membership. They do everything on the 1099 for crypto for me. Yeah. And I can just take that to him like it was any other 1099 property that's already itemized and optimized and the whole 9 yards. And he could just go problem solved. So, we're gonna as investors in this asset class, we're gonna need a team of more than one entity. There's no one-stop shop for all these things yet.
I'm sure there will be at some point. You're making a great point. What I want to tell you is that on a weekly basis, I'm having to educate people in the legal field and the accounting field, or pushing the conversation so they can have a better understanding, or encouraging them to join the space, and just continuously having the conversation with them, so that way they can realize that it's something that it's inevitable. I mean, I think that by next year, as we continue on the cycle, the 4-year cycle, and it starts to do its thing next year, when conceptually the price according to the stock to flow model starts to go up exponentially, that's what we assume. I think that would be it. I think that's the point where everybody's just going to have to say, look, I cannot ignore this asset class at all anymore. Remember, we're still about its peak was 20,000. We're at 10,500. Once it reaches 20,000, I think at that time the mainstream is going to jump on this asset like something we've never seen before. It's a limited asset. There they really aren't that many coins available in the exchanges. Any strong push can conceptually cause the price to go up. You will have institutional investors that are coming into the space. You have large corporations that are coming into the space, like MicroStrategy, where he put substantial, I think it was like $425 million of his cash reserve assets and purchase Bitcoin. So obviously he's not the only one doing it. We hear that in other boards they're thinking about that. So I mean, it's not going to take much for the asset just to skyrocket, because it's really undervalued. I mean, it's conceptually it's extremely undervalued asset. I'm sorry that I mostly, in our discussion, I've mostly only focused on Bitcoin, because I think really Bitcoin's the one that's really going to take the lead at some particular point very soon. Even though it is in the lead, considering it was the first, and it has that network effect. And going back to our earlier in our conversation, it just has that gold look to it. It's just, you know, that store of value that um, you know, that it's working on, and then the medium of exchange, um, you know, and then I just feel that that's the asset. I mean, I know that you like XRP and all that, and there are other tokens. My focal point right now is I'm the leader of the pack, and that's Bitcoin.
Oh,
You
I
know,
understand. I'm not a tribalist.
yeah,
Okay. I own Bitcoin. It's not the largest part of my digital asset portfolio, but I own Bitcoin.
yeah,
I own XRP. And what I did is I chose assets based on use case in the verticals that I saw from a macro perspective, having the least amount of resistance to acquire market share.
yeah,
Okay, so Bitcoin store of value, check. VeChain, I have a small, it's the smallest allocation in my portfolio, but I have an allocation towards VeChain because I believe that supply chain governance on DLT technology is a foregone conclusion. Okay, check. And I think they're the best in class in that vertical. Um, my play in smart contracts and programmable money is Cardano
okay,
for a lot of reasons. We don't need to go into them. And then for payments, which I believe is at the basis of all value transfer, it's XRP, which is actually my context is completely independent of Ripple, the company, who are trying to do what they're doing within the existing financial system. The actual asset XRP is so elegant in its ability for speed, cost, and reliability to move the value of this to that quickly. So if I'm doing something on an exchange, I'm in and out of XRP if it's going to leave the exchange and go somewhere else. It's XRP because it's so fast and so cheap. Ethereum and Bitcoin, which are these monster market caps, have exorbitant fees relative to the cost to do the same thing of XRP.
I
So
understand.
it's I'm just a realist, a practicalist. I'm not a tribalist. I'm not going to go down on my Bitcoin sword, or I'm not going to go down on my XRP sword. You know
No,
what I
I
mean?
understand that. I
I want to
understand
use
that.
the best tool. I want to use the best tool for the job that I'm doing, and maybe that comes from my building things my whole life.
No,
You know
I
what I mean? If
understand.
I'm going to go at a concrete wall, if I'm going to break and demolish a brick wall, I'm not going to take my 20-ounce hammer, which is beautiful for putting nails in wood, and go bang on that. I'm going to go get a 10-pound sledgehammer.
No, I understand. From my aspect, it's like Bitcoin to me is gold. It's like an insurance policy. It's really an insurance policy, and that's why I we can use these legal structures to protect it, like if it was an insurance policy, you know. So that's why. I mean, I understand all that other stuff, and then you know the or people that trade the asset. That's not for me. I just want to protect this precious asset so people can inherit it later on in life and have the correct structure for it. That's what's important to me. But I mean, I don't have a problem if someone else likes to trade it or they get involved with other assets. We don't know how the space is going to evolve.
Right.
The only thing to me right now, from an asset protection aspect and estate planning, and the asset that really stands out the most, and the one that you know that's precious to me, or and others that believe that, you know, that's all I'm trying to do and protect right now. I'm constantly educating myself. If my mindset changes, and you know, I change my mindset on something else, and I'm always willing to learn from you and from others. And but right now, from you know, I kind of try to keep it as basic, conservative, and just focusing on that asset at this particular moment. You
Well,
know,
as
that's
you
all. But
should. But lucky for us, in the eyes of the law, as it pertains to how the IRS would view a digital asset, they don't see Cardano or XRP any different than Bitcoin. So, as it pertains to setting up asset protection, doesn't matter if we're talking about Bitcoin
No.
Ethereum, Cardano. It doesn't matter. And that's the important thing. So for the viewers, let's just dive deep or deepish into, let's take a look at three things: LLCs and the difference between revocable trusts and irrevocable trusts.
Okay. Yeah. Well, with an LLC, a limited liability corporation, it's a business structure, and basically what it's doing, it's providing that separation from yourself and that entity, because you release yourself from being really the owner. You're a manager of the entity. Um, Within the LLC, like we had spoke before, is you can structure it in a way where, um, as a single LLC, or it could be a partnership, or it could be a couple, you and your wife. Then you can add, like I had spoken to, a layer of where you can have a trust, an irrevocable trust, where you can be, as the profits increase, you can be putting money into that irrevocable trust. Um, and so that way it becomes a generational tool. But going back, so then I can explain the difference between the revocable and the irrevocable trust. The revocable trust, um, you continue to have control. It is an asset that does avoid probate, so it goes outside of probate. You maintain control, so you still have signature and authority over the asset. So it's good for estate planning purposes, but it's not really good for asset protection purposes because you still maintain control. So with the other structure, when you're dealing with a limited liability corporation, there's where you're adding the layers, and then that irrevocable trust. Irrevocable trust, you have released ownership of the entity. It has its own tax ID number. So not only does the LLC have an employer identification number, but the irrevocable trust has a tax ID number. So I mean, you're adding layer upon layer of protection within the asset. So that's, but it all depends on how you want to structure things. You know what I mean? Going back now, if you want to have that structure set up at an exchange where you're using a revocable or irrevocable trust or an LLC, it takes months. It takes months. It's not an easy process. But I would encourage the people to start to educate yourselves, because maybe they don't want to set up the LLC. Maybe it's too complicated for them. But maybe they can set up that revocable trust, because unfortunately, when you set up, and I'm just working with the exchanges that I'm familiar with, Gemini and Coinbase. When you set up the account, you can't pick a beneficiary. You can't pick a beneficiary. You know what I mean? In the normal traditional world, if you have a bank account, you can have payable on death.
Right.
The person passes away, the asset avoids probate, it goes to the beneficiary. Again, also with the qualified account, you have transfer on death. A person passes away, it avoids probate, gets transferred. But the thing is, unfortunately, we haven't gotten to that stage, unless it's just recently happened, but we haven't gotten to that stage with the exchanges. Those two exchanges, in particular, those are the ones I'm talking about. Those are the ones that I'm familiar with. Yeah, you can't pick a beneficiary. So then now you have an asset that, if you keep your assets in the exchange, that for your family to be able to get those assets, they're gonna have to get a death certificate. They're gonna have to go through a whole process of getting those assets. It's gonna have to go through probate. What if it's a complicated estate? It can take about up to a year, and then you have all the legal expenses that are going to be involved with that. So, what I'm trying to do is just help people, incorporate the tools. So if you have a revocable trust, you set up a revocable trust, yeah, that's going to help you. If you set up an irrevocable, remember, irrevocable, you're relinquishing control. You have a trustee. So you're adding that layer of protection, but that's really mostly more for a generational tool, or to protect assets for when you pass away, for your spouse and your children. That's a good tool to use. So I would encourage, like we said, I would encourage to study these different structures. I would encourage anybody that has a qualified account that's looking to put that money into digital assets or into Bitcoin. I would have them study that aspect of things, because I think that like for yourself in particular, I would consider, and you already have a meeting on, I think you said on Monday, consider, conceptually rolling over those assets and just and buying the true Bitcoin within that asset instead of having the GBTC. I think that conceptually, because if it has a premium, isn't that, and maybe that premium can cause or can inhibit your growth potential. Obviously it is, because that has a cost. So why not just get that out of the way? You know what I mean? You not have to worry about that. I believe when you set up a self-directed IRA that owns Bitcoin, I think there's a nominal expense on an annual basis. You haven't met with the individual yet, but I think it's minimal.
Oh, I do. I'm very well aware of what the fees
what
are.
is it? What is it? It's just
well,
like
for instance, with
$100.
iTrust Capital,
Okay.
it's a minimum of $1,000 initial deposit.
Set up, yeah.
It's
okay.
$23 a month,
Okay.
flat rate, and 1% on any trading that's done within the account.
Okay. Okay.
And that's iTrust Capital. Now, Kingdom Trust has another one or two small fees, but they're there.
Okay. All right.
They are there. Now, is that a good thing or a bad thing? Everybody individual has to adjust, look at it for themselves. For instance, my Schwab account, my Roth IRA with Schwab, 0 fees, 0 management fees, 0 fees. Did I mention 0 fees? 0.
Yeah, understandable.
0 commissions trading within the account. 0. Okay. So yes, I bought GBTC, which is a premium on the underlying asset Bitcoin, but there are 0 fees.
Okay.
All right. So everybody has to weigh their own situation. I chose in this particular instance, and I'm not saying I'll never do a Kingdom Trust or iTrust Capital. I'm not saying I'll never do those things. I'm just saying what I chose to do initially was pay a premium on Bitcoin to have GBTC. Yeah. Because I knew that over time, fees are only relative if you look at time. You have to understand time. Well, I don't care how many YouTubers you want. Nobody's going to be able to tell you when this is going to go or when this isn't going to go. And is the cost of appreciation going to far exceed the cost to carry the accounts? Nobody can tell us these things. Yeah. So I chose 0 cost to carry, paying a premium on the underlying asset.
Oh, but look, you're involved. You're in it. You're there. You know what I mean? You found the best way to do it at that particular moment to be able to do what you did.
Correct, but the learning doesn't stop, right? And
that, we're all learning.
Hence why you're on the show. So, I'm looking down here at the clock and I'm thinking, okay, let's do a final thought, because, and here's the thing, I can already tell you and I are going to have further conversations. I guarantee it. Okay. So, final thought, wrap this up. I'll start. Pamela Moore's book.
Yeah.
Do you remember the title?
Yeah, it's Crypto Inheritance Planning.
Pamela Moore, Crypto Inheritance Planning. Now you.
Yeah. Oh, yeah. No. So I would definitely start there, and then if you guys want to communicate with me, it's just my name, Marcelo Cardinal. .com. You can locate me through there. You can find me on Twitter the same way that you were able to find me on Twitter. And, I'd be definitely glad to entertain any of your questions and concerns and, see if we can be an informational source, a guide. I mean, we're all learning right now. I mean, we're all, putting all these things together. It's definitely a new industry. And, there's obviously different minds, different mindsets, different thoughts. Everybody has different little structures or however they view things or how they're handling things. But it's always good to entertain different ideas, because maybe I didn't bring up something that was extremely important that may be viable, but it's something we can discuss on an individual basis. Everybody's situation is different. That's why I really didn't get too much into anything specific, because this is not tax relief advice that we're talking about right now, because we would have to know the individual situation of the individual, to be able to help you and guide you on this process. Look, it's going to be an incredible journey. It's very transformative. The world is changing, and there's a lot of obstacles. We're doing for right now, but I think this is the light at the end of the tunnel. You know, digital assets, the digital space, it's definitely a job creator, new ideas, new environment. Excited to be involved, excited to be part of it, excited to talk to you here today, and definitely look forward to developing the relationship and seeing where it all leads.
Right on. So folks, what an incredibly informative conversation, one that sparked some thoughts for me, new paths of discovery, right? Some new learning for me. Marcelo's Twitter handle and his website, the links will be right down in the description below. So thanks for tuning in to Beyond Moon. And until next time, Pura Vida.